Most accredited investors don't even realize that they can earn predictable returns without riding the Wall Street roller coaster. So, in today's video, I'm going to break down how conservative real estate lending can help you avoid stock market volatility, but while still earning stable, predictable income backed by Midwest real estate. So, the problem with volatility is this: you got wild swings that can take place in the stock market, and there's an emotional component to that. Right? When the headlines are raging and the market's going up, you feel like we're missing out. But oftentimes, the risk that one takes on the way up the roller coaster is significant. And when times are darkest, it might be best time to buy, but it feels very challenging, especially when the headlines say everything's doomsday and things are going to get worse tomorrow. Predictable income matters. Having steady, stable income can outproduce stock market, certainly on a risk-adjusted basis over time. Accredited investors tell me they look for diversification and they look to get away from volatility. They like stability and income in their returns. So how conservative real estate lending actually works? Well, conservative real estate lending works because you act like a bank. What we do is first mortgage lien positions only to people who are out there fixing and flipping real estate, or they're repositioning a property in the marketplace. Backed by real estate collateral, short-term lending structure. Loans are typically 6 to 12 months to allow somebody to get in there, remodel that, reposition it, sell it, or refinance the property to an actual bank for them to put it into their portfolio and keep it as a rental property. Stability matters in traditional investments. These are loan to values. We've got Midwest stability. Midwest is known for being slightly boring, and certainly the real estate, which I think is an attractive thing. Not a lot of highs, not a lot of lows. Much easier to underwrite from a loan standpoint. We've got contractual interest payments. Borrowers pay monthly interest payments, time in and time out. Collateral protection. So what happens if something should go wrong? Well, we're in first mortgage lien position. We can take the property back. Sometimes you can end up with a higher rate of return if that is the case. So what makes this truly passive? There are no tenants to deal with. There's no management. There's no termites. There's no maintenance. It's cash flow from interest-only loans that are being made. So at the end of the day, conservative lending is one of the simplest ways for accredited investors to avoid the volatility of the stock market and earn predictable returns. Now, if you're interested to see how we structure these, I dropped a video in the link below.